I was a real estate genius for about a year and a half before I got punched in the face, by the market crash that occurred at that time. As soon as I got that under contract, I just quit my job. I'm like, I'm done. I can't do this anymore. By me going out and pulling out 200 grand of my credit cards to make sure my investors weren't paid back, it actually was massively valuable because, the whole market tanked at that time. I've had other instances where I've had good friends of mine stealing money from us. I had partners of mine stealing money. We had multiple contractors that screwed us, and one cost me $500,000.
If you're looking for a perfect track record, that only means to me that that person never had to face any serious problems.
Most people think they want to be the lender, they want to be the fix and flipper, they want to be the developer. Really, you don't. You really don't. It's a lot of work.
I've got Matt Owens here with me, who's a CPA, who's a fundraiser, who's a house flipper, and many other things. Matt, why don't you introduce yourself? And I know I didn't do justice to this introduction because I'm terrible at it. So tell us, what are you? Who are you? What do you do?
Thanks, man. I appreciate it. No problem at all. So I'm a CPA by trade. I quit my CPA firm job in 2006 to go into real estate. I was a real estate genius for about a year and a half before I got punched in the face, by the market crash that occurred at that time. Since then, we flipped a little bit over 1,000 houses. We have over 35 million lent out to flippers in different markets. And then we do a lot of value add type projects. And I've raised over $150 million for both real estate and private businesses that we invest in different strategies. And it's a lot more fun than doing CPA work, the accounting and tax and audit work and stuff like that. And I enjoy doing it. We also teach a lot of people how to raise capital and the different strategies that go into that, and teach passive investors how they create these kind of financial freedom income streams that cover all their expenses so they can retire as well. So it's great to be able to take kind of my CPA skill sets on the accounting side, the tax mitigation, and help a bunch of people in these different ways.
I don't know how I feel about anybody saying that they enjoy doing the CPA work. That's, to me, it's like the most brain damaging trait.
Yes. And taxation is theft, so it makes it even worse. Yeah, so
Exactly. So, okay, you're a CPA and then you flipped your first house. How did that transition happen?
So I was in a lot of pain working at the CPA firm. Like you could imagine, pretty much every CPA on the planet is. They're just bored. And, I just couldn't do taxes and audit anymore. It was just monotonous stuff and really boring to me. Not a ton of challenging stuff. Yeah, it's cool to see the backbone and the internal controls of these businesses and see how they work. That was really valuable. But at the same time, I was bored and I needed something else. And I ended up taking some classes on real estate and immediately got my first deal under contract. This was like 2006, of course. So we went through and I got it under contract. We were going to do a renovation and we thought we were going to make 30 grand on it. We ended up making 20 grand on the flip. But as soon as I got that under contract, I just quit my job. I'm like, I'm done. I can't do this anymore. And threw myself to the wolves. And I think the wolves got me initially when I was doing great until late 2007 when the entire market tanked and we pretty much lost everything at that time. I was humbled, got massively punched in the face, took out 200 grand of my credit cards to pay my investors back, and then went down with the ship and lost everything at that time. Hunkered down, kept pushing forward, and just honestly by pure grit and grinding it forward and trying to continue to do what I was doing. I was able to bring in other investors to invest with us where I had paid them back. So they started telling other investors those strategies and what I've been doing and how I took care of them. And that kind of snowballed into doing like 5 of these a month where I would build in acquisition fees or rehab management fees to keep the lights on while I was doing renovations and holding properties or flipping those properties. And that's how it kind of continued to snowball into like 5 to 10 a month. So it was a long journey, but at the same time, we've been doing this for a long time now, like over 18 years now, and taking our punches in the face and our lumps along the way. But as any business owner does, of course, but it's been a great ride. We learned some great strategies on how to create wealth. So once you know that knowledge, you become really strong, right? So
So, right, the GFC crash. I mean, I remember that time very well. We had actually a project ready to start construction in 2007. We completed the permits, and I was struggling finding investors and mostly finding the lenders that would finance it. And I was really disappointed. 2007 ended, 2008 was worse, 2009 didn't make it any better. By the end of 2009, 2010, I realized I'm so lucky that I did not find a lender that would finance this project, because that would definitely take us under. But tell me, how were you able to recover from that loss? Isn't the first thing that most investors ask, well, what's your track record?
Right.
And your track
So
record at that time wasn't very good. How do you
yeah,
explain? How do you
yeah, for sure.
go
So
over that objection?
it's funny because a lot of real estate investors, they're going to go through this. If you're full time in this business and you're going through the ups and downs of the market or the changes in what's occurring, you're going to have losses. You're going to go and take a hit sometimes, right? It's a matter of what you do during those hits. And most investors understand that those things are going to happen. Maybe not the unsophisticated investors that haven't gone through, the W-2 guys that or girls that just are working on an everyday job and don't really understand how investments work, may not know these things. But anybody that's active, that's a professional, that's been investing significantly, is going to know these types of things. And so by me going out and pulling out 200 grand of my credit cards to make sure my investors weren't paid back, it actually was massively valuable because the whole market tanked at that time. Yes, I didn't see that happening. I mean, I was too new to realize that you could have probably predicted that. And a lot of my, I'd say, more experienced investor friends at the time did see that writing on the wall and the major run up and the destructive lending practices that were occurring here, that it could have happened, and the potential banking risks of a black swan event like a Lehman Brothers moment that occurred that made a major liquidity crisis. And that's really what took us down, was the lack of lending at that time when everything dropped in value and then we couldn't refinance any of our properties and had debt on them. In order to sell them, we had to sell them at a loss. And that's where our hit came from, right? But I basically took the hit for my investors at that time. And that's what they saw after the fact, to be able to start reinvesting and telling their friends what I did for them at that particular time, right? Now, did I miss that the market was about to tank right before I quit my job to go into real estate? For sure. Like, I didn't know and I, even though I was an economics major, I didn't really learn economics until after that occurred, right? As soon as that occurred, I'm like, oh my God, I got to pay attention to every aspect of the market here and not just focus on operations consistently and run 100 miles an hour. You become an expert really fast. And it's funny, I listen to a guy named George Gammon, the rebel capitalist, that talks a lot about economics pretty much all the time. And I got to go to one of his conferences recently and tell him that my wife hates him. And he's like, why does your wife hate me? And I say, because I make her watch economics videos like every night now, and she's like, I'm so sick of this guy. But it's great economics knowledge that now I have a major passion for, because I have emotional connection to that. And I'm always now looking out saying, where's that left hook gonna punch me from that I'm unaware of right now? Where's right now I look at the market and I see potential additional banking issues. A few years ago, we had banks failing and stuff like that. Just and more recently, how do I not have my entire strategy built on the banks? How do I make sure that I have a lot of investor capital that I can utilize as all equity on projects, so we don't take that financing risk in a lot of different ways, right? So that's a lot of the things we do. And we also go out and we be the bank too, where we are providing the financing for projects. So we have some power on our own deals, as well as being able to lend out on other deals and make profits on the lending side of the business. So learning the hard lesson of don't rely on the traditional systems, because they could go away. Utilize the hell out of them best you can, but rely on your ability to raise capital from private investors and private equity like this, and venture capital can be massive for your long-term ability to be stabilized in any kind of a market, right? So that's what's really been driving me through. And then my attention to the craft. You can imagine how many wrinkles I've gotten from flipping 1,000 houses and the ups and downs and the trials and tribulations you go through when you're doing that level of activity across the board. I've taken my licks over and over again and know how to push through those things and what to do when something bad happens. Don't get me wrong, I might be waking up at 3:30 in the morning sometimes going, I got to meditate, and de-stress myself. But, doing these things and going through those trials and tribulations are what make you as an investor. And it's really important that you've gone through that, because you don't know what you're made of until that's happened, right? So I've had other instances where I've had good friends of mine stealing money from us. I had partners of mine stealing money. We had a contractor, this multiple contractors that screwed us, and one cost me $500,000. So if you go through those trials and tribulations, how do you focus on the solution and push through instead of letting that weight get you? And how do you wipe that off your shoulder and not be emotional about it, but focus on, okay, how do I do this and make that money back? I had another instance where we were losing 60,000 bucks on a multifamily deal that I underestimated the renovation on. So I thought it was going to be way less, and it was like the plumbing falling apart in the plumber's hands and stuff like that from problems with the plumbing and subfloor issues and foundation issues and all kinds of stuff that came up that I just didn't see from the outside looking in. And I wasn't experienced enough at the time to know that. And I remember going to my wife saying, put your hand on my chest. I can't breathe. I just lost a salary today from this sale. And then the next morning, waking up saying, okay, I'm going to focus. What can I do right now to make this money back immediately and get this money back? So I'm not like, I know I fixed the problem. And I was already working on different 1031 exchange investors that had capital to redeploy. And I ended up getting another multifamily under contract, and then being able to flip that property to them in less than 2 to 3 weeks and making a $70,000 profit on that deal. And I remember that mindset shift at that time from, oh my God, like this is a horrible thing that happened, to figure it out and immediately take action on potential solutions and write down every solution you possibly can to say, okay, take action on all of those. One of them is going to hit. And that piece has been instrumental, I think, in my long term success, going through all kinds of trials and tribulations that you can imagine, doing the level of activity that I've had to deal with.
I think the mindset shift is the key phrase that you mentioned, because it's all up here, it's all in your hand.
Yeah,
If you can
absolutely.
adjust your thinking and refocus and just figure out what needs to be done. But you made another interesting point that I like to talk about with partners and investors as well, where I say, look, if you're looking for a perfect track record, that only means to me that that person never had to face any serious problems. Like if
Yep.
somebody never had a loss, if somebody never had theft, if somebody never had any of these major cataclysmic events and never actually went through a recession or two,
Mhm.
then yes, their track record might be perfect, but that's because they don't have enough experience.
One of the two, because
Right. Right.
every deal that they've done has gone through some stuff, unless they weren't dealing with the operations themselves, which could be the case too, and they're just not involved in that headache piece, and they didn't have to worry about it, you know. But anytime you do this, it's like those things are what gives you the hair on your chest, I'll say, and this you know, the finding out what you're made of and pushing through with that grit is like the most important thing, to never give up in those situations. You only fail if you give up. So, you know, you're going to go through those hits, and you have to know it and be ready for it emotionally so that you can be prepared for it, because then it's a matter of, when that happens, how are you going to emotionally react? Do you have control over your emotions enough to be able to say no, focus, or are you going to let that put you into depression for 3 weeks and you to never take action? If you take a major hit and you're just like, don't see the exit, right? And if you don't see the exit, you can't solve the problem. So you have to be able to envision the potential of those other opportunities and exit strategies.
Right. So I talk to a lot of property owners who are contemplating development opportunities, and typically they either underestimate the risk and dive in development business, or they overestimate the risk and they don't want to deal with it, and they're just like, no, just let me sell it and take my cash and get out of here.
Yeah.
So what we do a lot is we educate that yes, there is risk, but if you're working with the team that's gone through this, that knows what to anticipate, that knows how to evaluate that risk, that's really the path to mitigate it. Fundraising, though, comes up a lot. And for somebody who's never actually gone out to the market and raised equity for their deal, where do they start? Like, what's the first thing that they got to do?
So one, in my opinion, they need to understand their deal to like as much detail as possible and every risk that exists, and being able to explain how those risks are mitigated is key, right? But being able to explain it in a succinct way where you can answer any risk questions and have a Q&A together for any investor that comes up, and setting up your foundation of, this is my company, this is what we've done, this is the overview of my experience and why we're someone that you should be betting on when you're investing your money with us. That piece of the trust building component and the education of, this is what we go through. When I was doing all my fix and flip type deals consistently for and raising money for that, I would show them every component of what I'm doing on my deal from the start to the finish, and how much work it was, and the due diligence and the quality control we put in place, and teach them that strategy. And by the end of that education, they're like, that's too much work. You do it, and here's my money. You do it for me. And when you teach people that way, it builds trust, because they then understand what you go through as an operator, no matter what you're doing, whether you're doing development or multifamily. What's the risk mitigation? What's your process and procedures that you go through, and what workload is involved that you're doing on behalf of them to make sure that this deal is going to be successful? So when they see that, they're like, wow, they really are adding a ton of value, and I don't want to have to do that. Most people think they want to be the lender, they want to be the fix and flipper, they want to be the developer. Really, you don't. You really don't. It's a lot of work. And so if you show people that, it's a great way to start that capital raise process by having that infrastructure built from the start. Then it comes out to development of relationships, right? In the beginning, I was going to 4 to 5 networking events a week, every week for 2+ years, to develop new relationships with other investors locally, meetups, other interests of mine that had networking groups, chamber of commerce, real estate meetups, and stuff like that, consistently just developing the relationships that I need, and also the resources. So you are not only seeing the relationships and getting those relationships, long-term friendships for people with resources that have capital, that have expertise, but you're also seeing all these new ways people are making money too, which is really cool in that development. And so you start to do that, and then understanding the structuring component of your deal can be really, really valuable when you're raising capital too, in addition to the relationship development side. Knowing that, hey, if I structure my deal with 2 asset classes, maybe someone that invests under $1 million gets one return, and somebody with an over $1 million gets another term. This incentivizes other people to set up funds to invest in your fund and make a profit off of helping you with that piece. So you have 2 ways of raising money: one from individual investors that are going to invest directly, and one from fund to funds partners or other capital raise partners that you can partner with to be able to help with that project as well, right? And so doing these methods are absolutely key. Then it comes to the nurturing component. Everybody forgets about this. You can go to all the networking events, do all the online marketing and the social media posts and email marketing and all that stuff. Great. But if you don't nurture them correctly, where you have a welcome series to have them get to know you, and then they first come into your database, you have weekly things that you add value to them, and you're teaching them classes and things like that. And if you don't have a proper follow-up and sales system where you're moving them through a pipeline based on their interest in working with you, then you are dead in the water before you start. A lot of people don't have that back end sales piece dialed in, and it's not that easy to do. You have to have designated people to do that piece for you to be able to help with that. And you, as a business owner that knows the most about the business, might have to be stepping in on those conversations, of course, as well, and helping with that aspect of things. But that piece of it is key across the board. So there's a ton to implement, but really simply leads coming in, nurture, and sales meetings with those people, and being consistent with it over and over again is the key to the capital raise partnership, or the process. And having those key partnerships out there with other capital raise investors can be massive as well to help with that too.
Excellent. Yeah, that's a very good overview of the process. Frequently, when we meet with people, and usually property owners that decide to go into development, they're not professional developers, right? I don't have
Right.
this entire infrastructure built up. They just think, well, I've got this great piece of land,
Hmm.
and this could be this great, apartment building or house or duplex or whatever. And they think just because they've got this great asset, everybody's going to want to jump on it.
Right.
And so that's this education component that's comes in. Like, yes, I mean, it's a good asset, but here are the steps that you have to take to get it funded.
Right, right. And I think at the end of the day, it comes down to being able to clearly communicate the risks and how you mitigated them on that deal when you're having someone invest with you, the profits and the returns, and then your experience so that they understand how that works. And then making the process of them signing up to invest with you super easy, very as little time as possible from closing or someone coming in that wants to invest with you versus investing, because that process alone seems like an uphill battle sometimes because people have a lack of knowledge about how that process works. And so we teach people that process as well, including the tax side of things, what to expect on the tax side, those types of things. The more knowledge they have and the less fear they have, the key. And we actually teach people how to do the due diligence on us, because that's one of the biggest factors from any operator standpoint is how do I build the trust, right? You build the trust through being able to show them the due diligence or having them do the homework on you. So teach them, do a background check on me, criminal check on me, go through and look at my numbers and see, make sure you understand my numbers and agree with my numbers on my financial assumptions. Read the legal docs and understand that piece and the market. Look at how long I've been in business and what the preferred return on my deal is to make sure my investors get paid first before the operator gets paid, right? All those types of little metrics, you point that out to investors and show them how to do it on you. It makes their life so much easier to be able to understand, well, wow, this is what I should be doing. We give out a 200-point due diligence checklist to our investors for this. We have it on our website. My website is MathewOwens.com with one T in Matthew. But that helps a lot of people understand where their starting point is when they're starting to do the homework on any investment they want to do or the operator they really like, are interested in working with, right? And gets them over that hump. It's incredible.
Amazing. Thanks for this advice and the step by step process.
Yeah,
Definitely encourage all the listeners to check out the website and download the checklist. Matt, tell me about. I mean, we already talked about the GFC and how you crash and burn. Other than that, could you think of some of the biggest mistakes that you've made in business trying to build your empire?
absolutely. So a couple of the things that I think are important to understand is, every new income stream you have, if I start with fix and flipping and I go into lending, or I go into mobile home parks, I go into multifamily, I go into these different asset classes, they're going to come with a learning curve. They're not as easy as you think they are. Just because you know one asset class does not mean you know the other asset class and the systems that go with that specific asset class. So I learned that the hard way multiple times in a row, whether that's getting into my lending, getting into short-term rentals and all these different asset classes that we do now with multifamily and mobile homes and debt and all that kind of stuff as well. So you learn those processes as you go through and learn them. And they're going to take a lot more time than you think they do. One of my biggest mistakes is not delegating and setting up the right processes and systems right away and trying to do all the work myself, which made me much more inefficient at first until I was able to have the right people in the right seats with the right processes to follow, where it's like, here's this income stream. You're doing asset management, you're managing the managers, you're going through and doing accounting, you're doing marketing. Here's the people that are doing the different parts for that one income stream. Now let me duplicate that depending on what's needed on each other income stream that you're doing it on. And it makes you way more efficient at that side. That's probably cost me, a ton of money, really, at the end of the day, being inefficient initially before I understood how to properly delegate and set the business up for me being the business owner and not the self-employed person that's going out and doing all the work consistently myself, right? There's a book called Traction that really helped me do that. Another book by Dan Martell called Buy Back Your Time, which was really invaluable, I felt like, for that too. So some of these other books will change your mindset to doing that. One of the other big ticket items I'd say from a loss perspective is not firing people fast enough. If you have weak team members and weak people that aren't performing on your team, don't be the nice business owner just because you feel bad and that kind of thing. You have to let them go and have them do something else, because they're going to cost you a ton of money and a ton of extra time down the line by not performing. You got to, and doing your homework up front on people versus saying, hey, I like this person, let's hire them, versus, understanding and getting to know you period, and firing quickly versus letting them stay on for way too long. It's going to cause you a lot less pain by firing quickly if they're not working out for you and stuff like that, or not performing or doing their job. So, and that mindset piece, you got to take a lot more time on the interview process to make sure you know people, just like you would do on any investment, right? Take a lot more time getting to know people before you jump into bed and do business with them, right? Learn that lesson the hard way too, with contractors, realtors, property managers, every team member out there and operator. You have to get to know them and understand what questions to ask them to protect yourself, to make sure you're looking out for, red flags. I wish I would have listened to myself a lot more on those red flags in the beginning, because looking back, everybody that's screwed me in the past that I've seen have had issues or stolen or whatever, there was warning signs that I may have ignored because of me being excited about a deal or being too nice, think, that won't happen. This person's a nice person or something like that, in my head. And I should have paid attention to my warning signs a lot more. These are the things you learn in business as a whole, right? Doing this for 18 plus years now, you learn and go through this stuff. So,
Yeah, and I think my biggest takeaway is that real estate investing, real estate development is a full-time job. It's not
yes,
something that you could do nights and weekends. It's something that you have to dedicate your entire time and energy, because if you don't,
right.
then you're just going to make mistakes and you're going to lose money in the end.
I agree. And really at the end of the day, people should be investing with people like you that have development knowledge and that kind of stuff, that actually understand those trials and tribulations. A lot of people, like I mentioned, think that they want to do all this themselves, but really if you look at the return on investment on what they would be making with you or on their own, they're going to make 10 times more money with you, because you already have that experience. You've gone through that learning curve, and they don't have the labor time they've had to spend either. If you take out the labor time, and normally you're going to see the same level, if not better returns, just having someone else do it for you that already is an expert in that field, versus you trying to go through all that yourself. Even if you think your numbers look better doing it yourself versus working with somebody else and splitting profit with someone that's doing all the work.
Well, it's that split that people get caught up into, is that either
Right,
the fee, the development fee, or the management fee, the asset management fee, or the splits. And they're like, oh my God, well, if I just did it myself, I would
right.
keep all of that. You
Spent
don't know
100
what
hours doing
these
it,
people do.
and we're inefficient by and over budget, and didn't know how to do your job right, and deal with contractors and everything else. Yeah, so it takes a
Yeah.
lot.
So a common question that I get asked is, what are the return expectations? And I usually go through the process of describing different components of the capital stack of the GP, the LPs, the debt part. When you talk to investors, since you've got investors in multiple different of the capital stack, do you have a benchmark of what the return expectation should be for investors?
So it definitely varies across asset classes, and each asset class has its own pros and cons, right? For example, on large multifamily properties that are 300 plus units, you might be getting a 6% or 7% preferred return or something like that, with an 80-20 or 70-30 split on the back end of this. And you might be hitting an average cash flow return of 7 with a 15% IRR or internal rate of return on the back end. But if you're dealing with short-term rentals, for example, we're doing a fund that is basically going to be hitting 11% cash on cash return and a 22% or 25% IRR on the back end. But it's a different asset class completely than a very big multifamily building. And you might want to invest in both of those. Same thing with mobile home parks. We target 20% plus IRRs on those things, and a 9 to 10% cash on cash return on those types of projects. But a development project could hit 15, 18%, as well, or 25% as well on the back end. Especially, it depends. Most of the time, the development projects, you get paid on the end once the development's done. It depends on how you structure it, but that can be a very good asset too. And I personally think you should diversify into multiple assets, multiple markets around the country, and multiple operators if you're investing outside with other people. And then I also invest in properties as well as debt, because the property side is wealth building. You're using leverage to do the value add or be able to get an inflation hedge involved, tax benefits involved, and stuff like that, versus the promissory note side is consistent cash flow coming in more consistently basis right from the start as well, is usually a little bit more liquid as well with turnover of debt and that kind of thing, right? Depending on what you're investing in. And so I like doing both strategies from my own standpoint, from a cash flow standpoint on my side on the promissory notes, as well as a wealth building and tax benefit side over here on the property side and development side and things like that. I really like the value add components. When you're doing development or you're doing any kind of value add, you're forcing that appreciation up, which gives you built-in equity on that project to help mitigate any downside risk of that project in particular. As long as you have the good team, you have some built-in equity, because usually the person that's borrowing the money is putting a down payment down or some skin in the game, and you're going to be at a certain loan to value, maybe it's 70% of what it's worth. So there's risk mitigation techniques between each one, and each one kind of come with different benefits depending on what your focus is. And I like using both because I think they have unique values and you should be diversified. I also invest in gold and silver and some commodities and things like that as an insurance policy as well outside of real estate. I don't really invest in mutual funds and that kind of stuff too much because they steal all the returns from you in fees. So I leave it alone. I don't like not having control over the deal either. I don't feel like it's truly diversified like I can in multiple businesses and multiple asset classes and multiple operators in the syndication space. You can pick and choose and have control over your investments a lot more.
I used to have Series 7, so I used to sell mutual funds to,
Yes.
and when ETFs were born, we're like, oh, they don't actually need to be. I mean, index funds existed before ETFs, but now it just made it so much easier and so much more transparent.
I think it was Tony Robbins had mentioned recently about this, or I saw in one of his books talking about the percentage of the gains that are taken by fee structures. And it's just been the traditional way people invest, and big money and marketing behind it, and it has a place, right? Like you see a lot of people should not necessarily be managing their own money. And so they should probably go to somebody like that if they're not financially educated or not going to take the time to learn it, then fine. Don't go and invest in a bunch of syndications where you don't know who you're investing with and you're doing no homework and you're going to end up losing your money. So there's still risks on the syndication side, just like there is on the mutual fund side. It's a matter of what's your return and how much are you making? And do you have the right people helping you manage those things as well? So that's all the
Right. Well,
keys.
I think the key is what you said is diversification. You can't put
Right.
all of your money in one thing, whether it's
Yeah.
one fund, one stock, one whatever.
Right.
So
Right.
yeah,
As much
diversification
as I
and
want to put millions in XRP, I'm going to leave that alone for a minute.
right. Matt, what's your favorite tool? What do you use every day? What you can function without?
So there's a couple of tools that we use. One, we use Dropbox for file management. We also use for communication tools. We're talking about like Zoom and a lot of AI when we're doing content development and stuff like that, and different tools there. I really like using Monday.com from a project management standpoint. I think it's really valuable and enables you to set up reoccurring systems and reoccurring projects over and over again and track a ton of stuff. All of that is very, very important. We also use ActiveCampaign for our email marketing and sales management techniques. A lot of people use Go High Level as well, and some other, I'll say CRM systems. Those things are really, really important from that standpoint. We obviously use a lot of Google Sheets as well and tracking things that way, and QuickBooks for our accounting softwares. So there's so much softwares out there. I think you can spend 10 grand a month on softwares alone just on running a business. It's insane.
Easy.
Yeah, easily. Yeah. So, and then, our investment software, we use SyndicationPro right now for that piece. And all of our investors have kind of like, I'll say, a mini Schwab account sitting in there with their different investments that they invest with us on.
What else that we haven't talked about, Matt, that you would like to mention that's really important for the listeners to hear about?
So I think just understanding where we are in the market is super important. And if I had learned anything from taking those baths in 2008 when all that stuff happened, it's really pay attention to the economics and what's happening out there and the risks of the overall market. It's going to be very difficult to time the market, right? Because you don't know what's going to happen in the future. And the past is not necessarily indicative of what's going to happen in the future anymore because of the changes in AI, the changes in the systems, the amount of money that's being printed across the board. There's a lot of potential risks. I see risks out there with regard to banking and bank failures. I see risks right now because the commercial real estate market, the massive amount of properties and multifamily and office space and retail is having to be refinanced in the next few years, which could cause a liquidity issue when rates jump so much where they cannot refinance at those same rates. And we might have a lot of turmoil there that could hurt, right? There's so many changes happening politically right now, of course, as well. Who knows what's going to happen there? The tariffs and those types of things could cause massive inflation as well. And then there might be some other things like the efficiency piece that's happening right now within the government. We'll see what happens. I think there'll probably be a couple of black swan events nobody knows about, that come up. So I would suggest being careful in your investments, using low leverage, not having so much leverage that if something happens in the market that you're going to lose the asset. You want to be able to weather the storm and understand what your break-even points are on those things if something does happen. But I also see a lot of printing money out there continually and inflation still happening. So, real estate prices, it depends on the asset class that you're investing in, right? Real estate prices could be going up. They may not be going up as much as inflation goes up. And so therefore you might be losing purchasing power by owning real estate. At the same time, if you're leveraged, that debt is getting decimated by that same inflation at the same time. And so real estate prices may, even though inflation's going up higher than that, but your debt is getting decimated too. So your wealth preservation stays intact because of that debt piece that you're able to leverage on, right? So I think being careful, low leverage ratios, quality assets that are going to give you good long-term returns, and look at the markets you're investing in, because every market is independent of each other. Don't think that this is a nationwide thing. Yeah, there could be nationwide liquidity issues that could occur, but it depends on the supply and demand in those markets. We have kind of a broken market right now with very low supply and very low demand also, because affordability has been hit from the interest rate spikes and run up of property values too, because they just printed all this money in the last few years. If you look at the money printing, it's like this. It's insane how much money is printed. So holding hard assets in the long term, I can't see that being a major issue to do that long term on these assets. I just think the value is going to rise. There may, be short-term turmoil with wages and that kind of stuff that could cause a dip. But if you look at this long term, your long-term play is always ride that inflation wave as best you can, because I don't see it not continuing. So,
Right. So do your research, low leverage, be smart about it, look at the politics, look at the local market
mhm,
and the fundamentals. Those are the key things to
right.
make decisions, and watch out for the liquidity crunch. And since you mentioned that, I'll allow myself to do a shameless plug, because this is my show, but we just launched
Well,
a distressed asset fund,
nice.
and we are focusing on assets that are in financial distress. We call it special situations fund. So assets that are in financial distress, not in physical distress, meaning they have that cash crunch come due. They're not able to make their payments, and the investors are able through our fund to pick up these assets at good discounts. We have a lot of ethical structures in place that we're putting in. So it would be a very good opportunity, and a very short period of time in the market when opportunities like this exist. So that's why we're bringing it to the market.
Absolutely. You look at the potential opportunity coming, it'd be really, really key to do that at this time.
Matt, how does one find you? What's the best way to reach you? And what are some of the products that you would like to talk about to your investors, to your clients?
They can reach me at MathewOwens.com with one T in Matthew. I say because my parents couldn't spell, even though they're engineers and CPAs. And it's just one T in Matthew. So MathewOwens.com. We have our due diligence checklist on there. We have quick analysis sheets. We have a couple master classes on how to raise money, how to analyze deals and find deals, and all that kind of stuff available for people for free. I'm a CPA, so we have CPA services. We have bookkeeping services that we help people with, CFO services. I really help people on that side. It's one of the biggest crutches of small business as a whole, is that piece of this. We also help people with the marketing aspects, because we have internal marketing teams that work with us on this stuff. We love helping people with structuring their financial freedom goals and being able to help them to be able to structure their lives from a cash flow standpoint and wealth preservation standpoint. So however we can help, we're there.